Hey everyone, welcome back to the channel. Today we're breaking down one of the most popular and powerful tools in modern investing, the ETF. If you've ever wondered what an ETF is, how it works, and why so many investors, from beginners to billionaires, use them to build wealth, this video is for you. We're going deep into the mechanics, benefits, and strategies behind ETFs, so grab a notebook and let's get started. ETF stands for Exchange Traded Fund. At its core, an ETF is a type of investment fund that holds a collection of assets, like stocks, bonds, or commodities, and trades on a stock exchange just like a regular stock. That means you can buy and sell ETFs throughout the trading day, and their prices fluctuate based on supply and demand, just like shares of Apple or Tesla. But unlike individual stocks, ETFs give you instant diversification. When you buy one share of an ETF, you're essentially buying a small slice of every asset it holds. Let's say you want to invest in the tech sector but don't want to pick individual companies. You could buy an ETF like the Invesco QQQ, which tracks the Nasdaq 100 index. That one ETF gives you exposure to giants like Apple, Microsoft, Amazon, and Google, all in a single trade. This is one of the biggest advantages of ETFs. They simplify diversification. Instead of researching and buying dozens of stocks, you can buy one ETF and instantly spread your risk across multiple companies. There are different types of ETFs designed for different goals. Broad market ETFs, like the SPDRs and AMP, P500, ticker, SPY, track major indices and are great for long-term growth. Sector ETFs focus on specific industries, like healthcare, energy, or technology. Bond ETFs invest in government or corporate bonds and are often used for income and stability. There are also international ETFs that give you exposure to markets outside the US, and thematic ETFs that target trends like clean energy, artificial intelligence, or blockchain. One of the reasons ETFs have exploded in popularity is their low cost. Most ETFs are passively managed, meaning they simply track an index rather than trying to beat it. This keeps fees low, often under 0.10% annually, compared to actively managed mutual funds, which can charge 1% or more. Over time, those savings add up and can significantly boost your returns. Plus, ETFs are tax efficient. Because of their unique structure, they tend to generate fewer capital gains distributions, which means less tax liability for investors. Another key benefit is liquidity. Since ETFs trade like stocks, you can buy or sell them anytime the market is open. This gives you flexibility and control over your investments. You can set limit orders, use stop-loss strategies, or even trade options on certain ETFs. And because they're so widely used, many ETFs have high trading volumes and tight bid-ask spreads, making it easy to enter and exit positions. Now, let's talk about how to use ETFs in your portfolio. For beginners, ETFs are a fantastic way to get started. You can build a diversified portfolio with just a few ETFs, say, one for US stocks, one for international stocks, and one for bonds. This gives you broad exposure and reduces the risk of being too concentrated in any one asset. For more advanced investors, ETFs can be used to tilt your portfolio towards certain sectors, hedge against market downturns, or generate income through dividend-focused ETFs. It's also worth noting that not all ETFs are created equal. Some are very straightforward, like those that track the S and AMP, P500. Others are more complex, like leveraged ETFs or inverse ETFs, which aim to amplify returns or profit from market declines. These can be useful tools but are generally better suited for short-term traders and require a solid understanding of how they work. If you're just starting out, stick with plain vanilla ETFs that track broad indices or sectors. To wrap things up, ETFs are one of the most versatile and efficient investment vehicles available today. They offer diversification, low costs, tax efficiency, and ease of trading, all in a single package. Whether you're saving for retirement, building a college fund, or just trying to grow your wealth, ETFs can play a central role in your strategy. The key is to understand what you're buying, match it to your goals, and stay consistent over time. If you found this video helpful, be sure to hit that like button, subscribe to the channel for more investing insights, and drop a comment below. What's your favorite ETF and why? Or let me know if you'd like a follow-up video comparing ETFs to mutual funds or diving into specific ETF strategies. Thanks for watching, and I'll see you in the next one.